Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market uh, during the day and how we can plan for a better trade for the next trading day. So this is analysis for March 31st, Thursday, an expiry day and the last expiry in this financial year, 2022. So it was no bullish day, no. It is really a bullish gap up day, and we have an expiry today and monthly expiry, right? So let's analyze what happened in the market. So this is no pre-market show based on all the parameters that you see on the screen on the left and the right side, right? We would have data analysis on the parameters that is on the right side. We'll have some actionables, and we'll wrap up the show with the market view. So look at this, hammer, hammer, hammer. This is also kind of hammer, right? 3 days of continuous bounce up from the gap support. So this gap is a superb support, right? That's what Nifty is showing, and this is not really a hammer but almost like a hammer, right? And a gap up. There is a gap that is formed here. That's each of these gap that is formed would obviously act as support on for the indices. So the right side you see the bank Nifty. There is also a gap up. It's not a, it's kind of a spinning top, small body, right? Not much learns at this stage. So it's a or you can say that it's very similar to the Nifty, So what is unique that you can understand is, this long wick size is there everywhere, longer than the body size on both the indices. That indicates that there is some amount of selling that is happening and then a V-shaped recovery happens. The morning it gaps up, then some selling happens, that's some profit booking, and then some buying happens and market moves up. So that's what basically these three candles indicate. So it is a bullish day. So let's get into specific details how it happened. So 173 points gained today, 1% up Nifty, and it is close with a small body, but it is small body, looks almost like a hammer for the Nifty, and it is close to about 50, 100, 200 EMA. All that is cleared, and Fibonacci 61 retracement of the last downward movement is also cleared. So any price movement above 61 Fibonacci would normally indicate it can further move up. Retracement last level is what it is concerned almost. So the price action, you can see that it's a trend down breakout that is happening here, right? And there is a flag pattern. You can see that it has bounced up nearly 12%, and there is a flag formation. There was a consolidation on the gap support above the 200 DMA that happened and formed some kind of consolidation flag pattern, which is clearly broken out today. You can see that a big gap up and it cleared about Fibonacci. Bank Nifty also, you can see that there is a flag formation that's here, pole and flag, right? Which is broken out with a gap up on closing in green above that, right? But you have the confluence of all the three DMAs of 200, 150 down there. So Bank Nifty, what happened is 487 points, 101.36 of move happened, right? And small body candle, almost like a hammer or a spinning top, you can call. So the thing is, there is a gap resistance on the upside, right? Here you have the gap resistance and the 200 EMA and the Fibonacci 61 retracement of the last swing. All three are there, right? But it moved up. It gapped up and moved 3 days in, in sync with the Nifty, you can say, right? So intraday wise, this was the price action, right? It gapped up and then it consolidated between a 100 range point in the Nifty and a 400 point range in the case of Bank Nifty, right? Bollinger Bands, what do they say? You see the expansion of the span supports, that indicates what? Bullishness. Bank Nifty, that expansion has not fully started, just started, not good enough. So, and the price is above the 20 DMA, price is above the 20. So overall bullish bias is there, but from the both side view, if you look, there is consolidation that is happening as of now with a very high volatility on Nifty and the Bank Nifty. Support resistance levels, you can see that its support is 370, 350, 17400. Immediate down there you have the support of 7200, 300, then 7300, and 17,000 is the major support of the gap endpoint, and then it is not broken till now. And you have multiple gap supports. So 350, 400 would be a very good support because it is a gap actually, right? So downside again, then 16800, 16900 Fibonacci 38 retracement would be the next support below that. Resistance upside similarly 17500, 7600 close above is very crucial, and Fibonacci 23 retracement would be for the swing from the last swing low. But this is also a confluence of a Fibonacci 61 retracement if we consider only this swing, the last swing downward move that is happening, right? And above that 17,800, 850 is the resistance, and then above that 18,000 would be the resistances, right? Bank Nifty, similarly, you can see that the flag pattern is there. It is a proper note today, and the resistance would be this is at a resistance zone of 36. 300 to 36 800 is Fibonacci 38, and above that you have the next resistance, which is very crucial, which is a gap resistance, which is uncleared till now, and that is near to 37,100 level. 37,000 is the level where it is there, and then any close above the immediate resistance above that of 37,500, which is the Fibonacci 23, is also very crucial, and above that you have 37,700, 37,800, that is all the resistance from the upside. So the major thing is to close about 37,300 or 37,500 level for the Bank Nifty. Support downside is 35,900, 35,600 to 35,900 levels, immediate one, and then below that you have 35,000 kind of levels, Fibonacci 50 level, and below that you have 34,750 to 34,350, that's on support, and below that you have one more gap support that is still there, which comes close to 34,000 kind of levels. So 34,000 is crucial on the downside, which is the Fibonacci retracement level from the last swing also, and 37,500 also is crucial for the for the gap resistance to be taken out of the Bank Nifty. So make a note of these resistance levels. And momentum, if you lose, there is no divergence in the momentum, but momentum overall has Nifty has touched the bullish zones and just touched. So tomorrow we'll say whether it will maintain that. It's an expiry day, so it's very crucial that the momentum climbs and settles down in the bullish zones. Right now we'll just touch the bullish zones, you can say, but medium term it is sideways only. Bank Nifty remain to sideways in the medium and the short term also, but you can see that it is a rising up momentum, that is bullish, and medium term it is bouncing up from the support of the 40 RSI. Right, so overall bullishness can be seen since the bear rally of 12% recovery from the bottom that has happened. Now trend indicators are showing that the Nifty is in the short term in the bullish DMI positive zone, and Bank Nifty today also has crossed over the positive bullish DMI positive levels, right, on the short term. So medium term it continues, trend is not picked up, it is still in the bearish zone, the crossover has not happened, but that may soon happen. But yeah, the trend has slightly changed the short term for both indices, which is a good thing, but there is not much strength as of now seen. Weak strength, crossover has happened, just touch the bullish zone. So VIX cooled a further 3% and 20.61 still above 60, right? And IV implied volatility of the Nifty is 20.8 and IVP is 79.12. Big cool off that has happened, right, on the implied volatility percentile. VIX is still not cooled off 20, uncertainty is still there, you have to be cautious. Operators, you can see the unwinding of the calls on the Nifty and some unwinding of puts also far away, OTM. And unwinding is clearly visible on the near the central point. All these places, the unwinding on Bank Nifty also has happened. So that means there is some bullishness. Definitely bullishness there. Put call ratio is 1.11 and Bank Nifty 1.06. That's clearly saying bullishness. This unwinding says that people are afraid that market may, means option traders are assuming that the markets may move further up. Look at the range, it is narrowed down to 17,000 to 18,000. That's a level. So market is expecting 17,000 to 18,000, but it can close the expiry tomorrow. This is for the expiry tomorrow, March 31st, the last expiry of this financial year, and also a monthly expiry of March, right, 2022. 16,500 and 18,000 also, and 7,500. 16,500 and 7,000 point. 17 to 18,000, that is 1,000 point. That is where the highest put and the highest call ratings, first level and second level is put. So overall bullishness you can see. Levels are also matching with 70,000 is a good support on the downside. We have got a gap resistance also there. 18,000 is a major resistance because we have to cross several hurdles before that, and market is not likely to reach that in one day, right? Even with the 500 points move, which is less than likely. Bank Nifty 34,000 and 36,000 is the first level where the highest put and call rating is there. Then 35,500 and 38,000 is the second level of put and call rating, which are where the support and resistances are seen. As you know, BCR is clearly indicating bullishness, and long build-up is what the futures latest build-up from today. Price action has happened, right? So upper interest is bullish. Yeah, overall it was all most heavyweights are all moved green, except TCS which didn't do well and ITC which didn't do well. But all sectors performed except pharma and metals. Right, metals were doing good, but for some fundamental reason it is not performed today. But still remains bullish actually. Look at the let's look at the performance of the IT sectors. IT sector. So almost all sectors. IT sector moved 1% up. Remember, it is very and it has turned to bullish also in the momentum wise. Medium term is yet to catch up in bullish on. So if you want, you can take positions, but tight stop loss. Metal turned turned down actually. Red close to percent, and short term momentum is also bullish, and medium term also medium. So metal is a sector that continues to be good enough from a long from a medium term and short term point of view, which is bullish. But today's close is a worry. So IT and metal bullish. Pharma also turned bullish today with flat move but bullish on the short term. But medium term has to catch up just like IT. So you have to be cautiously bullish with tight stops. So pharma, IT, metal bullish on the short term. Right, could take cautious positions on the long side. Auto, pharma, realty is that to catch up, right? Although reality did move 1.5%, although auto also moved 1.5%, FMCG also moved up, nearly 0.6%, but that's not good enough to pick them up from the sideways zone. So auto, FMCG, reality still sideways momentum, and IT, pharma, and metal have turned bullish on the short term, right? Institutional participation is good news. Fyers have bought 1,357 crores of buying in the cash, and there's 1,200 crores of buying from the day also happened. That together the market went up. So we do not know whether the Fyers would. Last day also they had been buying little. So whether it will sustain or not, whether this is only a pause before a big sell-off, or this is a beginning of a new start of buying, we do not know. We'll have to wait and watch. But it gives some hope to the bulls, right? That the Fyers are back into the buying mode. USD INR has turned again up. Rupee has weakened today, and it has gone again back to 75.8 levels above. Momentum is rising, but it's still sideways after it has slipped up from the top. And USD INR also closed green after a big drop off that happened yesterday. Till yesterday, it has taken a support, and but it is a big cool off in the dollar that has happened on the dollar index. You can see that clearly on the graphs. Global markets, if you see, it is they're doing good. You have a good bounce up that continuing, and it is almost the bullish zones and momentum. Trend is turned to short-term bullish. On the Dow Jones, we are seeing same is reflecting in the Nasdaq. It is already momentum is in the bullish zones. Price is moving up, and volumes are picking. And S&P 500 also price is moving up above the median of the parallel channel, and bullish trend and bullish momentum has started appearing in the short term, but you'll have to take a look at this on the next day pre-market to get a confirmed view, right? Because the whole day of trading has to happen before our market opens tomorrow. So that's a mistake. The crude picture is not coming correct. Let's quickly go and see how the crude has performed. So this is the crude chart. So crude has turned green, right? But a good cool off it has happened in 105. 105 is where 105 is where we can see it's still at a high level, right? But some cool off from the 13-year high has at least happened. You can see, and gold is kind of. Consolidating at the same zone after the failed breakout that has happened. The momentum is still not caught up. It's fallen back to the sideways zone, and it is consolidating. It may take a lot of time before the false breakout. Just close to the all-time high. Failed during the previous weeks, right? No actionables. So crude is a slight cool off is there, but it's again rising. So it's anything above 100. Is a worry. Need to be a worry. It's momentum has cooled off little, has come down to sideways, and little cool off has happened, and hope it keeps that level. US markets are bullish, everything is bullish, but crude is little worry, as long as it remains above. And gold is also calmed down, not breaking out, taking consolidating, right? So two actionables. One is Power Grid Corporation, which is well within a trending channel. Good volume buying is happening. Momentum almost touching the bullish zones, and trend is close to the bullish zones. On the daily time frame is what you see here. So you can give a good swing trade to the top of the channel at least, right? Next one is Intellect Design. Intellect Design is having good volume, good momentum, good trend, and box rectangular pattern breakout that is confirmed to be happening and can be good swing trade, right? To action. And overall wrap up. Mild bullish. This is what my short term view for tomorrow. It's based on the chart patterns, the support resistance levels, the bullish momentum, the crossover that has happened, the crossover to the bullish trend on the short term on Nifty, the Bollinger Bands, upside, expansion, contraction, sideways, all this we had seen. Based on that, I have concluded that my view for tomorrow is mild bullish, mild, but still cautious because it's a resistance zone. So market still short 12% of recovery happened, right? Just 2 weeks, and good support levels are there. 200, 150, all DMs are conquered. Now the main thing is that it's still at a major resistance zone. It could be a false breakout. It can immediately fall back to the trend channel from where it blocked out. And banking index is kind of slow. Not that big moves are not happening. Gap ups are there. It is going in sync, but it's not good enough, right? It has to clear above the 200 DMA and the gap resistance on the upside. Fyers has turned buyers for the last 2 days, but that's not good enough. It's not giving any indication that they're going to turn out to be buyers, net buyers in the cash from the next days or not. We don't know that. We'll have to wait and watch. And rising crude and dollar is also concerned. So basically, volatility is still there. Market fear and greed indicators are not saying that it is over with, but some amount of cool off definitely has happened. There is war, there is peace talks, there is war talks. All this is happening. But unless we see the market to comfortably move upwards from the 17,500 with with green closes, at least coming days, and 37,500 on the Bank Nifty, right? We cannot be sure until then, right? So we have to be cautiously, mildly bullish is what I would say. So as a buying is a good thing, but positive factor is that one of the positive factors is that we had a 12% recovery in 2 weeks, and the Fyers finally turned to be buying something. And global fear of index cool off, little bit cool off has happened, right? But we have a lot of things to worry still. So if you want to trade indices, you have to be sure that the VIX is not going to spike again and forming a consistent range below the 20, right? Hedge your portfolios, with gold or any other investment strategies like using options and all that, right? You can still get quality stocks for some well-corrected stocks like HDFC or good quality stocks in the Nifty 50 can still be available at cheap prices. This may be the last chance, and but that can be done at SIP mode, not at one shot, right? So option trading strategies and setups, if you are trading on it and if you are carrying forward the position, make sure that it is hedged completely by risk-defined strategies, directional, or spreads or whatever, calendar spreads or whatever, but it has to be hedged so that you know what you are going to lose and you will have some capital left behind even if something drastically happen overnight, right? So that's my view, mild bullish for the short term tomorrow. And if my view helps, the way I concluded to my view helps you to conclude your view of the market and your trade plan for the next day, consider hitting the like button and share to your friends. We have very few subscriptions. Appreciate your help in this regard. Thanks a lot for watching. Happy trading, happy learning. Bye.